Hey guys, and welcome back to another episode of Let's Discuss. Today I'm going to be talking about the pros and cons, and then I'll be kind of comparing dividend and growth stocks. Just kind of tell you what they are, what the differences are, kind of help people pick the stocks that best align with their investing goals. I think it should be a good discussion. But first things first, if you haven't checked out my Monday video, the M1 Journey talked about 4 dividend stocks you guys should look at buying now. So check that out if you haven't done so yet. And then for next week's video, next Let's Discuss video, I'm again letting you guys choose which stock I pick. So right now it's between Disney, ExxonMobil, and Advanced Micro Devices. I have a poll out on Twitter, so check that out if you'd like to help me pick what I'll be talking about. So we'll go ahead and get into it and start discussing dividend and growth stocks. So I'll kick off today's discussion with dividend stocks. Dividend stocks are described as companies that regularly and have a history of paying dividends. These are generally well-established companies that have a long history of sustaining revenue and earnings. They're more or less companies that have been around forever. Household names, some include like Coca-Cola, Walmart, AT&T, just companies that are really considered to be near the top of their industry and have a very, very long established history. The reason most people invest in companies like this is because of that stability. There's very little risk or volatility with these companies. They're a good way to generate passive cash flow, especially for people who are heading towards retirement and or already retired. They're really a favorite among retirees for that reason. So when you're invested in them, you'll get that cash flow to your account just for owning those stocks in the form of dividends, which is just a part of a company's earnings that they dish out as a reward to their shareholders. So when you own this stock, you will get that dividend just for owning that stock if they do offer a dividend. Now, not all companies offer a dividend, but it's easy to find out if that respective company does. So me personally, I focus mainly on dividend investing overall. I do have a few growth stocks, which I'll mention here in a second, but it's a nice way to draw a little bit of income on that money that you've invested. Usually a safe yield is anywhere from 2 to 3 or 4%. That's what's generally considered safe, and because of that yield, it's what really makes it attractive to a lot of investors. Growth stocks, on the other hand, are companies that are younger and are rapidly increasing their capital. That's mostly what their focus is putting all their earnings, all their revenue back into the business to grow it. They generally have increases in revenue that far exceed their competitors within their respective industry. They're companies that appreciate in share price rather quickly, more so than dividend stocks. They're definitely considered to be more volatile for sure because of the day-to-day fluctuations can be much more drastic than you would see with the dividend stocks. They're generally considered to be a little bit more risky than their counterparts because they don't have that long history of success and establishment for their brand or product or service. So they're kind of the higher reward, higher risk play, whereas dividend stocks are kind of lower reward but also lower risk, which is important to a lot of investors. Growth stocks are also a key part of any person's portfolio, especially if they're looking for a lot of appreciation and value very quickly. For that reason, growth stocks like Tesla or Nvidia or even Square are very attractive for that reason. So these are kind of companies that people look maybe not as long-term investments, but maybe shorter-term investments, especially compared against most dividend stocks, which are generally buy and hold for a long, long time. Growth stocks, most investors will look at in trading or having options trades or just acquiring as many shares as possible to increase in value in a short amount of time. But some stocks like this have proven to be tremendous long-term holds, stuff like Amazon, Netflix, just to name a couple. And that's really the main difference between the two. Now, a lot of people try to ask, is one better than the other? Is dividend investing better than growth investing, or vice versa? And I would generally have to say that neither is better than the other. It's kind of one of those things that it's a matter of preference. If you are an investor or a trader or whatever you do with stocks, if you know what your goals and ambitions are, then that can kind of lead you to one path or another. But there really is no significant advantage to either, depending again on what your own personal goals are. If you're looking for more passive cash flow, if you're looking to draw income, then definitely dividends is for you. If you're looking to get in and make a quick buck, then growth stocks probably is more of the play there. However, I think the best course, if you're a serious long-term investor, would be to be a mix of both. Whether it be, a 60-40 split for dividends to growth, or maybe even 70-30, get income, but also have a small part of your portfolio really focused on getting quick growth and appreciation. Because the key thing to consider when investing in growth stocks, especially over a long time, is that growth stocks, generally speaking, if they are successful, become the dividend stocks of the future. So like a company like Amazon, which has been on a tremendous run for the past 10, 15 years, may not currently offer a dividend, but I'm sure the time is coming to where they will eventually do so. When a company reaches a certain size, they will generally try to reward their shareholders for investing with them for so long, and they will dish out some of their earnings, not put it back into the company for growth, but give it to the shareholders as that incentive for investing with them. So that's kind of the give and take there is, is appreciation more valuable, or is letting dividends compound over a long time more valuable? And there's a lot of debates about that, but I myself prefer the compounding effect of dividends. Right now, as if you watch my M1 Journey videos, I'm only making, $3, $4, $5, occasionally $10 per dividend payment. But I'm hoping over many, many years that will compound from, $10 to $20 to 40 to 80, and so on. And I think that can realistically happen as long as I'm making regular routine investments. Now, that's not an attack on growth stocks, because I certainly have those too. I have several, like advanced micro devices. I have a small holding in Square. I have a small holding in Workhorse, these different volatile growth stocks. So definitely know your goals before committing to one way or the other. Know what you want out of your investments. That's definitely the big advice between the two, because I can't commit to saying one's better than the other because I don't believe that one is. So those are kind of some of my thoughts about growth stocks versus dividend stocks. So guys, if you did enjoy this discussion, I hope you did, feel free to share that in the comments. If you disagree with some of my points or have a thought of your own, please share that as well. I'd love hearing back some of your feedback. If you want to check out my social media pages on Instagram and Twitter, and hopefully soon to be Facebook, because I haven't gotten around to it yet, but it's coming, I assure you. Follow me at bpruitt_YT. I share my thoughts pretty frequently on those platforms when I'm not making videos, so check that out. Of course, guys, like and subscribe if you enjoyed the content, and I will see you guys on Monday. Catch you later.